Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Thursday, the 27th of April, 2017. We're about 1:45 p.m. Central Daylight Time. Well, when you come to the grains, you can see that the wheat's up, the corn's up, and you even pulled up today the meal and the beans. Now, cold weather was hitting parts of the wheat belt. Oklahoma, for example, we heard 25 degrees was there. Parts of Wisconsin, Madison, Wisconsin, was getting snow today. So you've got different things, different elements going through the country in a big way right now. Cotton down, pulling itself. It had gotten up pretty high here, so it's finally giving a back off from that 80-cent area. In the cattle market, you're limit up in the live cattle, limit up in the feeder cattle. Hogs dragged along with it. I did an interview today with the Wall Street Journal, and they were asking me, why are commodities down? And I pointed out that two groups seem to be doing good. Gold is hanging in here still at the 1266 level, and for the year it's still looking okay. And the meat markets. Everything else, as I'm seeing it, no. Energy's down hard, the grain market's down hard. It's one market after the other. The pros so far in the first 4 or 5 months, they probably haven't hit the markets the way that they thought things were going to go. But we don't have that inflation story. And we might have oversupply of a lot of commodities at this point, especially in the grain markets, and that was the points that I was making. Now, when we take a look at the bean chart, the weekly chart has gone down approximately $1.70 from this peak that it made at the beginning of this year, 2017. This is not a very impressive bounce that we're having so far. The market for the week so far down 5.25 cents. When we come to an area chart of closes, well, you get down with the lower close tomorrow, and this market's going to start looking ugly. You get under here, I'm going to be shifting from that up thrust to a down thrust. I can even make an argument right here that that market's starting to fight that battle, and it's got to get itself up if we're going to look for anything good. The hardest thing with the grain market at this time of the year is being short, and that's because these weather situations, we're April 26th. Weather is such that those April showers, remember those songs when we grew up? Too much rain. We're still at the point where, as I just mentioned, you're going to have cold weather coming through. So we get into May, then it's a little bit different. And that's only a week away, so things to keep in the back of your mind. As we look at the daily bar chart, you can see the market is finally developing something of sideways action. You haven't had it in any of these levels. You've got it right there. Now, as we take a look at the chart, what I just said to you, and I'll stick with it. You take out 954.5 and you've taken out this support level. Now, you haven't broken through everything here, but you'll break the pattern of higher lows and higher highs. So I think that's going to be the number the pros are looking at in a big way. Where's the battleground? If you can't see it, I don't know why you watch these videos. This is that line in the sand, that red line. It's the 18-day average of closes, and markets often go to that number and battle at that number, trying to figure out what to do next. Could it be the 20-day average or the 21-day moving average of closes? It could. I prefer the 18, and I'll let it go with that. But this is what I'm looking at. I like what I'm seeing, that it's going to tell us what to do from here. As long as 54.5 isn't hit, my guess is if you took out today's highs, you'd get some interesting buying going into the weekend. I'm not saying that will happen. I'm just giving you an idea. The problem for me is the market looks capped in two areas, 69.5 and 45.5, as the Bollinger Bands are narrowing in. Doesn't mean they can't go to them and push them out, but right now that's not what I'm seeing. And momentum, you've worked out of an overbought condition on the rally up here, but you also haven't got momentum pointing to the upside. The meal market, a little more interesting, but still momentum not turning up. Again, the battleground, the 18-day average of closes. If the market can lift out of here, you might be able to get back to that upper Bollinger Band. In looking at this market, I would not be surprised if the pros play it in two different ways tomorrow. First, a buy over today's high with stops under today's lows to go short if it takes out today's lows. Or, and that's assuming they get filled on the long side first, okay? If it just drops down first, I don't know what they'll do. So I see two different strategies there, a double reverse, if you will. Trying to get long, and as long as these aren't taken out, you'd have what pattern? Higher lows and higher highs. That's the only reason I'm saying it. Let's assume you drop down instead first. Until you take out 311.40, and even if you do, you got a higher high and a lower low. That was the strategy, and that's all that I can tell you. It's not a trade recommendation in any manner. It's just what's clear on the chart at this point. Soybean oil is flat in momentum, but it's in an uptrend. But again, this is my fear that I showed you in the beans. Gets up to the upper Bollinger Band, can't go anywhere. So you're trading for 16 to 20 points. It gets hard to do that, and that's what we have going on in that particular market. But here, the bias is up, the trend is up, momentum is flat. In the corn market, battleground, 18-day average of closes. Past 3 days, that has been the number. And again, I'm going to repeat myself like a broken record. Between this number, the 18-day average, and the 100 seems to be where the resistance is in the marketplace. What is the trend right now? Well, it's interesting. I have this arrow pointing down, but as I'm looking at it, if this is the close, you get rid of that arrow, and actually you should have it pointing up. You'd have an argument for higher lows, higher highs. You're not in an uptrend in terms of bias, though. You're still under the 18-day average of closes, but I will change those arrows for tomorrow. That's what they're doing. In the wheat market, you got a 416 low that I believe is under that low, a higher high, nothing to do. Momentum is pointing up. When I say nothing to do, there's no trend off the swing line. You're not making higher highs and higher lows. Resistance seems evident at 434 3/4. In the sugar market, 2 days in a row under the lower Bollinger Band and trying to embed with new lows on the move. This is a sick-looking chart. It could easily get you, let's see, we have both numbers under 20 today. Yesterday, both numbers under 20, not the day before. Tomorrow's going to be the key on a Friday. There's nothing friendly on this chart. If it embeds, I expect to see a lot of willing sellers and rallies back into the 1650 area. In the coffee market, you are riding the lower Bollinger Band as you're trying to take this market lower and do the same as in sugar, trying to convert from oversold to locking in a trend that just keeps taking the market to lower levels. In the cocoa market, I think I've made it clear that I thought this market, when it lost its embedded reading, would try to get price and the 18-day average together. I'll stick my neck out and say I'm still expecting that. The swing line is up, but you're under the 18-day average. There is nothing to trade if you were looking for everything to be together. Momentum's up, swing line's up, but your bias is down because you're under the 18-day average of closes. The cotton market today, momentum turning down. Price action got up 3 days ago or so to the upper Bollinger Band, and pretty much, folks, that was the end of the upside momentum. And now the market broke through this low today, so you got a higher high and a lower low. Nothing in terms of a trend there. Bias is still up because you're over the 18-day average, but momentum is pointing down. Then we get to the cattle market, and boy, since China met with President Trump, this market came out of this sideways action and has been nonstop, just nonstop. Somebody is expecting something or somebody knows something, but the combination maybe of spring, we're going to go barbecuing, China maybe wanting our meat, away you go. Feeder cattle, they're making so much money in the lots in the feeder cattle, and I've been writing about this in my newsletter, that I can't imagine anyone running one, just not running out and buying these animals. So the breaks in them are right now short-lived because the profitability is so strong. And then the hog market, it got over the 72.90 level today. That's the end of that decline. You now have a pattern of a higher high, this last break low under the Bollinger Bands was it, and the market just sprung to life after that. Once you lost the embedded reading right here, this day, game was over. And now you're paying for it as the market's up here. I don't know how high it'll go, but it appears to me that this market's on fire, as they say, at this point in time. Let's talk about Modern Trader. This is the May issue of the magazine. Trend following, where's the money going? Trading Eurodollar seasonals. The chalk and oscillator, if you like that. Measures of risk, long-dated curve flatness, and of course, ETFs. What if you trade just stocks? They're here. They'll tell you which ones they're looking at, what the patterns are looking at. Patterns within patterns, technical stories. This is a $79 value. You get a one-year subscription along with your daily market focus. All you need to do is give us a call. You can go to our website to sign up for it. You can click right under our name that you see here. On many websites, it'll say, click for Ira's free offers. Or if you're watching me on YouTube, click this icon that you see. That'll take you the rest of the way. I'm Ira. You have a good day, and I'll talk to you all tomorrow.